Hello everyone, welcome to my channel. Nvidia right now is the next major event for the stock market. Its earnings will determine pretty much everything for the next month or so. We have another big event coming up after that on September 6th when we get the unemployment report. And this is important because the Sahm rule has been triggered. The cooling labor market has faded speculation that the United States could be in or headed for a recession. The unemployment rate has been gradually rising from a low of 3.4% in April 2023, and the July jobs report showed slower job growth and an uptick in the unemployment rate to 4.3%, the highest rate since October 2021. This triggered a popular recession indicator, the Sahm rule. This insight discusses how recessions are determined and what the recent triggering of the Sahm rule may mean for the economy. Economist Claudia Sahm created a real-time indicator in 2019 that is used by many economists and policymakers to identify whether the economy may be in a recession. The Sahm rule is triggered when the 3-month moving average of the unemployment rate increases by half a percentage point or more relative to its low in the previous 12 months. The Sahm rule has typically been triggered by the beginning months of a recession, meaning that it does not predict recessions so much as it indicates that one is occurring. Still, an indicator triggered in the first months of a recession would typically be more timely than an NBER declaration, which takes forever. What is a recession? Recessions are not determined by the federal government and are not defined in statute. The National Bureau of Economic Research, NBER, the arbiter of the U.S. business cycle, defines recession as a significant decline in economic activity that is spread across the economy and that lasts for more than a few months. It does not have a set formula to define a recession. Instead, the NBER evaluates a downturn based on 3 criteria: depth, diffusion, and duration, among various indicators such as income, employment, consumption, sales, and industrial production. The 2 indicators the NBER most closely considers are real personal income less transfers and non-farm payroll employment. The NBER dates recessions after they are already underway and sometimes not until they have already ended. For this reason, unofficial indicators such as the Sahm rule can provide policymakers with useful real-time information on the state of the macroeconomy. So the important thing about the Sahm rule, it's not predicting that we're going to go into a recession. It's saying we're already in a recession, probably. I think I know why Jerome Powell was so dovish in the meeting at Jackson Hole. He was dovish in indicating that, yeah, we're going to cut rates for sure, more or less. He was indicating that because he has the Sahm rule, which has been triggered, and then there was a massive downward revision of the number of jobs that are in the country. U.S. employers added far fewer jobs than originally reported in the year through March, the Labor Department said on Wednesday, underscoring the growing concerns the Federal Reserve has about the health of the labor market as it gears up to start cutting interest rates in September. The department's estimate for total payroll employment for the period from April 2023 to March 2024 was lowered by 818,000 in a year. You know, by reducing that much, they more or less are saying that the jobs numbers that were reported were each 30% too high. The sharply lower number is the first of 2 benchmark annual revisions undertaken by the department as it collects more accurate data, only available in the months after it publishes the monthly payrolls report. if the tally holds through the final revision in February, and typically the revision does hold pretty close, it will be the largest downward revision since the 902 reduction to employment in March of 2009. The last major revision was right after the great financial crisis in 2008. I do not like the timing of this. I don't like the memories it's bringing back. So here you have a chart of the unemployment rate since March of 2024. And you can see it was triggered by the low point was in April of 3.8%. And then in August, it had reached 4.3%, which is where we are now. So the next employment report that comes out, if it stays the same, the Sahm rule is already triggered. Is it going to get worse? That will be the big deal. If it even goes to 4.4%, the stock market will go absolutely crazy on September 6th. As you can see from the chart, the Federal Reserve changes the interest rate. They will be cutting it, almost 100% sure they will be cutting it. The question is only how much. There's a 68% that they'll reduce interest by a quarter of a point, and there's 32%, which is actually pretty high, that they'll do a half point cut. I don't think they'll do a half point cut unless on September 6th, the unemployment rate goes to 4.4% or higher. Part of the problem with the stock market is technical. Basically, as you can see from this chart of the S&P 500, we're running into a double top. It's having trouble getting over 5660 of closing at 5660 or higher. It's having trouble doing that, and that's a double top, which typically is major resistance, and it could indicate that we're headed downward. The 50-day moving average and the 200-day moving averages, right now it's above both of those, which is good. The relative strength is only 60, so it's not underbought or undersold. That's reasonably good. That looks fairly good. It's just troubling that it's having so much trouble breaking through the 5660, and it's been hovering there for about the last month or so. The major high was in July, and a month later, we're still sitting there trying to go forward, but we have the major economy just blocking us and keeping us down for now. The general economy worries me about Nvidia's earnings. I think Nvidia earnings will be good. It's just, will they be super fantastic, out of this world is the only question. If it's anything less than super perfect, it will be a barrier for it. I don't expect it to run into anything, but things are so difficult right now. I made $500,000 on artificial intelligence stocks. The majority of that was Nvidia and super microcomputer. And super microcomputer has been having a very difficult time. What is super microcomputer? Super microcomputer is a maker of servers, essentially, for artificial intelligence. They make big racks of servers for data centers. And the company is one of the largest producers of high performance and high efficiency servers. It also provides server management software, storage systems for various markets, especially data centers, cloud computing, artificial intelligence, 5G, and edge computing. But looking at super microcomputer, SMCI, is disturbing. Okay, I made most of my money on this stock, trading above 800 to over 1,000, well over 1,000, close to 1,200 sometimes. Okay, and SMCI was about half the story. Nvidia was another half. They were probably each about 40%. The other 20% was other artificial intelligence stocks that I traded, that I've reported on. I had about 8 of them. Right now, it's so uncertain what's going to happen. And it's really up to Nvidia. Super microcomputer is just struggling. There's no way to put it. Looking at this chart, the 6-month chart, it looks like a sell to me. It was up around 1,000, over 1,000, over 1,100 6 months ago. And now it's at 562. And today it went down almost 50 points. Its relative strength is only 37, which is pretty poor, and it's below its 50-day moving average. Looking at this, it's like sell it before it goes down further. Now, will it be rescued by Nvidia? It should be, but looking at this chart does not inspire any confidence, and you'd be ahead probably to stick with Nvidia. SMCI has gone down almost 35% in the last 6 months. Nvidia, on the other hand, has been a different story. It's gone up 60% in the last 6 months. But again, looking at this chart, it's running into like a triple top. And it's having a hard time getting above 135 at closing at 135. And it's been hanging there since, the middle of June. And this is not really good. You'd expect it to push through it if people were more convinced that it was going to go up. And on the networks, they're talking about how overpriced it is and how it keeps going up simply because the retail crowd is pushing it. But it's hard not to have faith in a stock that's done this well. And its relative strength is 57. It's neither overbought nor oversold. It's well above both its 50-day and 200-day moving average. It's hard to have doubts about this stock. But I'm starting to feel a little bit like I felt with Tesla. I made $500,000 on Tesla also. But at some point, Tesla more or less had its big run, and it's been trying to get back to the good old days, and it really hasn't gotten back there. And I'm feeling a little bit like, has Nvidia made the majority of the fast money so far? I think it has good long-term prospects. I think it'll continue to grow. I think it'll go gangbusters, actually. But I think right now the economy is putting a dark cloud over everything, which I don't think Nvidia can escape entirely. Although if there's one stock that can hold this market up and keep us up through difficult times, it will be Nvidia. But the question is, can it do it? So we will all be holding our breath in the aftermarket on Wednesday when Nvidia reports its results. It is a macro event. This stock has that much influence on artificial intelligence. It dominates artificial intelligence, and it has such a large capitalization that it affects the entire market and certainly the mood of the market. This could save us in a way, or at least keep us above water for a month or two. But that September 6th employment number, if it's over 4.3%, that will be a disaster. It'll be a reaffirmation of the Sahm rule, which says that now we are already probably in a recession. That's the way I roll. Thank you.